Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a story that's been making waves in the financial sector. The U.S. government has launched a new initiative dubbed the Trump Accounts, which aims to provide investment accounts for newborn babies. The program, announced by President Trump, will deposit in $1,000 into investment accounts for all children born between 2025 and 2028, with some 25 million families estimated to be eligible. The accounts will be invested in low-cost index funds that grow tax-deferred, with income taxes due upon withdrawal. The government is encouraging families to make additional contributions to these accounts, and some private investors have already contributed more. For example, entrepreneur Michael Dell and his wife Susan have invested $625 billion into the program. The White House is promoting the accounts as a way to address the lack of savings accounts for many American families. According to their estimates, if no additional contributions are made, the accounts will be worth around $5,800 by the time the newborn babies turn 18. However, if families contribute the maximum $5,000 each year, the account could accrue almost $1.1 million by the time the newborn turns 28. Financial analysts have weighed in on the program, comparing it to retirement accounts and noting that taxes will need to be assessed at the time of withdrawal. Some major companies, such as Visa and IBM, have pledged contributions to their U.S. employees' accounts, and President Trump is calling on all employers to follow suit. The introduction of the Trump accounts comes as the U.S. midterm elections approach, with Republicans looking to retain control of Congress. The program is being seen as a way for the Trump administration to address voters' affordability concerns and promote economic growth. We'll be keeping a close eye on this development and exploring its potential implications for investors and the broader economy. For now, it's clear that the Trump accounts are a significant initiative that could have far-reaching consequences. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into a fascinating story that's making waves in the tech industry. Nvidia, the company at the forefront of artificial intelligence innovation, is facing scrutiny over its sales to China. Recent reports have surfaced that Nvidia's AI chips may be ending up in the hands of Chinese military entities, raising concerns about the potential misuse of this powerful technology. Now, let's take a step back and look at the bigger picture. Nvidia has been a leader in the development of AI chips, which are used in a wide range of applications, from data centers to autonomous vehicles. The company has also been investing heavily in research and development, with its CEO Jensen Huang touting the potential of AI to create new job opportunities and drive economic growth. However, the issue at hand is the sale of these chips to China, which has sparked concerns about national security and the potential for military applications. The U.S. government has imposed restrictions on the sale of certain technologies to China, citing concerns about intellectual property theft and the misuse of sensitive information. Nvidia has maintained that it complies with all applicable laws and regulations regarding the sale of its products, including those related to export controls and national security. However, some lawmakers and experts have raised questions about the effectiveness of these controls and whether they are sufficient to prevent the diversion of sensitive technologies to unauthorized entities. It's a complex issue, and one that highlights the challenges of balancing economic interests with national security concerns. As the world becomes increasingly dependent on AI and other emerging technologies, it's essential to ensure that these innovations are developed and used responsibly. In related news, Nvidia's stock has been experiencing some volatility, with some investors expressing concerns about the potential impact of these developments on the company's bottom line. However, others see this as a buying opportunity, citing the company's strong fundamentals and growth prospects. As we navigate this complex landscape, it's essential to stay informed and consider multiple perspectives. We'll continue to monitor this story and provide updates as more information becomes available. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to a crucial aspect of personal finance that can have a significant impact on our financial well-being, mortgage rates, and home loans. Recent data suggests that mortgage rates are hovering around 5.97% for 30-year fixed-rate loans, with refinancing rates slightly higher at 6.08%. But what does this mean for you, and how can you make informed decisions when it comes to your mortgage? It's essential to understand the different types of mortgages available, including fixed-rate and adjustable-rate loans. Fixed-rate mortgages offer stability and predictability, while adjustable-rate mortgages may provide lower initial rates but come with the risk of increasing rates over time. When choosing between these options, consider your financial situation, credit score, and long-term goals. Additionally, it's crucial to be aware of the potential pitfalls associated with mortgage loans, such as scams and predatory lending practices. Recently, there have been reports of individuals being targeted by scammers promising unusually low interest rates or guaranteed loan approvals. It's vital to approach these offers with caution and thoroughly research any lender before making a commitment. To navigate the complex world of mortgages, it's recommended that you work with reputable lenders and seek professional advice from financial experts. They can help you determine the best course of action for your specific situation and ensure that you're getting the most favorable terms possible. As we conclude today's episode, remember that investing in a home is a significant decision that requires careful consideration and planning. By staying informed and being mindful of the potential risks and benefits, you can make smart choices that will help you achieve your financial goals. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.